Joining me now is Sean Cleary, CEO and Chair of Strategic Resources. Great to see you again. Thanks for coming in.
Well, thank you, Mark. Thanks for having us.
Now, you talked about a lot of things last time. You're delivering, and we'll get to that, financing, offtake agreements, and so on. But the company made a decision to start with the iron pellet plant at the Port Saguenay because it's lower risk. So can you give us some of the reasons behind that decision?
Well, we have a very large project in Quebec, and we're very much focused on that. The project is large and complex, so as a way to reduce risk of execution, we've broken the project into 3 phases. Phase 1 being the iron ore pellet plant, which is lower capital requirements, a simpler project execution and construction, and it just really reduces the overall risk profile of the company and allows us to, get the project going.
Now, in terms of delivering and executing on what you said you're going to do, you've done that in a number of ways. So Javelin Global Commodities, they're out of London, and they're going to supply pellet feed. There's an offtake agreement involved as well. And on top of that, $150 million US dollar credit facility. So how did that come together, and can you give us some more detail there?
Well, we were introduced to Javelin through one of our large shareholders, Orion Mine Finance out of New York, who are a significant sponsor of the company along with the Quebec government. And we found Javelin to be extremely knowledgeable. Their lead trader in the iron business is a former Iron Ore of Canada employee. So he really knows the space, he really knows our geography, and quite frankly, they were very smart about their approach. We like the fact that it's an open book deal. We're paying them some fees, yes, but they're providing some very valuable services, including securing high purity iron feed for the plant. Working capital, virtually all of the working capital that we need to operate the plant, and then securing the pellet contracts on the back end for the sale of the product.
Now, you're also in talks with Societe Generale, SocGen out of France, another European company, obviously, for a $300 million US dollar deal in debt financing. That's pending some engineering and metallurgical work as well. So can you elaborate on that one?
Yes. So Societe Generale is our financial advisor on the debt side, so they're mandated with us. The overall capex for phase 1 is $500 million US dollars. So 60% will be in senior debt. That's SocGen's mandate to provide that. We've done a lot of work with them so far. It's going very well. We think we've identified who the syndicate members will be for the debt financing. As you mentioned, we do await the final feasibility study results, and then we'll be able to complete that part of the project financing probably in Q3 this year.
And then, Sean, you still need some equity financing. So will that come from strategics or financial institutions or existing shareholders, combination of all 3? What do you think?
Well, our existing shareholders have already signed up for committing up to 25% of the capex required, and that's outside of the involvement of Orion. So we expect potentially additional funding from those other shareholders, as well as we've had great interest since the announcement that we did with Javelin from other financial institutions, strategics, as well as pension funds to invest into the company.
And can you remind us about the project itself and the location and the advantages to being at Port Saguenay, this new industrial park, and the fact that you have access to natural gas?
Yes, so we are the first tenant at the industrial park at Port Saguenay. So we have a 39-year lease at the Port Industrial Park. This is a deep sea port on the east coast of Canada, tributary off of the St. Lawrence. So we have full access to the St. Lawrence as well as down, so out into the Atlantic, down into the Great Lakes, et cetera. So it's a super strategic location because low cost hydroelectric power, so we can make a green product, access to natural gas, the availability of a modern pellet facility, which Canada desperately needs. We're really at peak capacity in terms of pelletizing up in the Labrador Trough. So this is a solution for the industry. It's going to provide a greener pellet product as the steel industry tries to reduce its carbon emissions.
Now, Sean, just lastly here, these deals obviously have perked up some interest among investors, I would think. So when you are talking to investors, let's say at a conference, what are they asking about? What are they talking to you about? Are you sensing a lot of interest from these kind of people? And what about what's your impression of the general perception of Strategic Resources?
We're still a junior, so we're still a small company. I think investors look at us and think that, we have a very smart business plan. We were very well sponsored. I think, earlier last year, there was questions about could we put in place the offtake contracts to supply the plant with pellet feed. I think now we've largely addressed that with the Javelin announcement. I think there's more to come, and we're looking to build. This is really phase one of a 3-phase, very large project in Quebec that has government backing, private equity backing. So we're looking forward to a very bright future, and I think a lot of investors. There might be a little bit new to this part of the iron processing space within the Canadian context, but there's certainly interest in, they're certainly listening to what we're doing, and I think the market's interest is going to reflect in the share price over time.
All right, very good. Thanks for the update.
Thank you.
Very good. We'll see you again. Sean Cleary, Chair and CEO of Strategic Resources.